Hello everyone. In this video we will discuss today this illustration 4 on this PDF. Let's go through the question. Following is the balance sheet of Ashwani and Bharat on March 31st, 2014. Okay, there's a balance sheet given here. Liability side we have creditors, we have Mrs. Ashwani's loan, Mrs. Bharat loan. These loans are simple loan, okay? Do not confuse with the partners. These are simple loan. Investment fluctuation fund is also coming here. We have reserve fund, capitals of Ashwani and Bharat. So let me just tell you, creditor, Mrs. Ashwani's loan, Mrs. Bharat's loan, investment fluctuation fund. These are all third-party liabilities, so they'll all go to realization account only, whereas reserve fund, capital account will go to the capital account. Cash at bank will go to cash account. Stock, investment and debtor at 40,000 will go to realization account debit side, and provision for doubtful debt of 4,000 will go to realization account credit side as liability. Building, goodwill, both will go to liabilities, realization account as assets. Okay. Then we have the firm was dissolved on that date. The following was agreed. Transaction took place. Ashwani promised to pay Mrs. Ashwani's loan and took away stock for 8,000. Bharat took away half of the investment at 10% less. Debtors realized for rupees 38,000. Creditors were paid at blah blah blah. Okay, there is nothing much, so let's start doing. Okay, let's do one by one this thing. Let's take creditors, Ashwani's loan and Mrs. Bharat loan and investment fluctuation fund, these four items to the realization account. There is your realization account. Mrs. Ashwani's loan, Mrs. Bharat loan, investment fluctuation fund and creditors. We have taken from the book value from the balance sheet. And also, okay, forget that. Then reserve capital, reserve of 20,000 and capital of 20,000 will go to capital account. Where is capital account? Here. So balance brought down 20,000, 20,000 here, and reserve fund was 20,000. So we divided in the equal ratio 10,000, 10,000. Okay. So liability side is done. Let's go to the asset side. Cash 17,000 will go to cash account or bank account here. 17,000 here you can see in the debit side. Then we have stock, investment, debtors, building and goodwill. Okay, they'll come here. See, investment 20,000, debtors 40,000, the gross value, not the 38,000. Building, stock, goodwill, all the assets are taken here. Now this provision for doubtful debt of 4,000 rupees will come here. You see in the credit side of realization account. Provision for doubtful debt rupees 4,000. All right. So we are done transferring all the items of balance sheet to the realization account. So our balance sheet is empty now. Now let us go through the adjustments, what they say. The firm was dissolved on that day. The following was agreed transactions took place. Following was agreed transactions took place. Okay, fine. Number one, Ashwani promised to pay Mrs. Ashwani's loan. See, Mrs. Ashwani's loan was supposed to be paid in cash, but it was taken by Ashwani itself. Okay, so what will happen? In the realization account, this one, Ashwani's capital, we will transfer Mrs. Ashwani's loan to Ashwani's capital because he's taking away the full value of 10,000. Okay, so once Ashwani's capital is debited in the realization account, it will be credited also in the here realization account. Mrs. Ashwani's loan 10,000, it is credited also in the capital account. Okay, so first part is done. Second part, and took away stock for rupees 8,000. Stock is 10,000, we don't care for that. Stock is taken care at 10,000, 8,000, where it is here. You see, Ashwani's capital account. Since Ashwani is taking, so it will not be bank. We will transfer to Ashwani's capital account. Stock 8,000, and in the capital account here, realization account in bracket stock 8,000 rupees. He is taking it away, so we will deduct his capital account. Okay. Next, Bharat took away half of investment at 10% less. Investment is how much? Investment is 20,000. Half of 20,000 is 10,000 and less 10% will be 9,000. So Bharat took here. Bharat's capital investment 9,000. How? 10,000 was half he took away at the rate of 90%, that is less 10%. So 9,000 is here. Okay. Now this Bharat's capital account will also be debited with 9,000. You'll see here. Realization account investment in the Bharat's capital column 9,000 is here. Okay, so Bharat's investment is taken care. Debtor realized at 4 rupees 38,000. Creditors, okay, debtors where it is. Debtors realized at 38,000. Okay, creditors were paid at less of rupees 380. Creditors were how much? Creditors were 76,000 minus 380 will be 75,620. So by bank creditors 75,620. Okay, so this creditors will go to bank account. Realization account, creditors 75,620. So creditors are paid off. Okay, at a discount of 380. Building realized rupees 1,30,000. Here we have buildings 1,30,000. They are all under bank. Okay, realized means we are receiving money. Goodwill for 12,000. Goodwill for 12,000 here. And remaining investment of 10,000 were sold at rupees 9,000. So investment here is 9,000 again here. Okay, an old typewriter. Okay, fine. Let me see the total of this bank investment, debtor, building, and goodwill, which is 1,89,000. Now we'll go to cash account here to realization account 1,89,000. These assets realized. Okay, so all the assets are realized now. Out of 1, 2, 3, 4, 5, all are realized. Stock was taken care by Ashwini and rest are being realized. Fine. Now he's saying an old typewriter not recorded in the books was taken over by Bharat for rupees 600. So here it is. We are putting to Bharat's capital account. Bharat's capital account in bracket typewriter 600 rupees. Now it will go to Bharat's capital account 600 rupees here. See, realization account, sale of typewriter 600 rupees. So that is taken care. Realization expenses amounted to 2,000. You know it is debited always. So bank realization expense 2,000. So once bank account comes, so bank account also there should be entry. So realization expense of 2,000 is put in the bank account credit side paid. Prepare relation account, partners capital account and bank account. Alright, so we have taken care of everything from the question. Now we'll see creditors already paid. Mrs. Aswani's loan was taken by Mr. Aswani and Mrs. Bharat loan 20,000 was not taken care. So we will put here bank Mrs. Bharat loan of 20,000. We'll pay them in full. Okay, so realization Bharat's loan 20,000 done. Then anything else done? Bharat loan taken care. Investment fund will not come. That's it. So now what we will do? Real estate fund done, assurance capital, everything is done. Okay. So now what we'll do? We will simply balance it and see which side is big. In this question, your credit side is big, which is coming around 3,18,600. We'll put on the both sides 3,18,600 and we'll minus all the debit side items and we get a balance of 55,980. This 55,980 we divide in the equal ratio 27,9904 Aswani and Bharat. This will put over here. Realization profit 27,990, 27,990. Okay, it is done. So now we will balance the capital account of Aswani and Bharat. Okay, and we get a balance of 59,990 for Aswani and 48,390 for Bharat. So we will gonna pay them by to bank. On the bank account we'll write by Aswani's capital, by Bharat's capital 59,990 and 48,390. Now if you balance these two, both sides will be same. Okay, so we have discussed this problem. I hope you can do it on your own by now. If you have any issue, you can always call back. Okay, thank you.